Elections coming upon us, how do they impact the real estate market? We're going to take a look at mortgages, home prices and sales, and see if there's any connection and correlation between elections and regular market. We'll also look at the aftermath of the NAR lawsuit. The changes went into effect, and let's see what's happening on the ground with the realtor fees and commissions and how deals are being done. And as usual, we're going to actually look at the local Philly Suburbs market, because ultimately real estate is all local, and see how we compare to all the trends that we're seeing in the national markets. Hello folks, this is Bella Vora. I'm a realtor in the Philly Suburbs, and here's my September 2024 market update. So we're going to take a look at what's happening with the home sales, what's happening with the mortgage rates, and what's happening with the home prices. With the home sales, they're pretty much, so first of all, there's no major impact on all of these three factors. Election cycles every 4 years impact somewhat, but it's a very small percentage change, and so nothing significant to report in terms of, the sales don't drop drastically, the prices don't increase drastically, mortgage rates don't drop drastically. So basically there's not that any strong correlation with the election year. But let's take a look at the actual numbers and see what the percentages say. The home sales increase after the election year. So there's a slight dip in the election year just before the elections because of all this uncertainty. People kind of step back from making any big ticket decisions and say, okay, there's uncertainty about the future. I'm not going to make any decisions about life and moving and my home right now. But that stagnation, that little bit of pulling back, is more than made up for by the post-election sales. So in every year following the election year, home prices have increased. So here's a chart that shows, this is Keeping Current Matters. This is a very reputed organization. They're looking at home sales in the last 9 out of the 11, election cycles, and they are showing home sales just continuing to increase post, election cycles. What's happening with the prices? The prices also tend to go up after the elections are over. So while there's no significant change before, after the election year, now there is certainty. Now people know what the policy expectations are. Now people know what, their confidence comes back because they know what to expect for the next 4 years. And now the prices are, increasing. So if you look at the chart, 7 out of the last 8 years, the prices have increased after the election cycles. So we're expecting more price increases next year. That's a little crazy if you believe this stat, but this is what the numbers are saying. If you see that one little dip, that orange line in the middle of it all, the year after election, the year is 2008. We know that 2008 was a crazy year for real estate. That was the year of the subprime mess. That was the year that real estate caused a recession. And, that was a very unusual year. So, of course, the fear is that going to happen again. Anytime someone mentions recession, the fear is that it's going to be 2008 all over again, right? The difference, the best way I can explain this is real estate causing the recession, or is the recession impacting real estate? That's a good question to ask. In 2008, the real estate caused the recession, right? There were subprime loans. People were getting loans that they couldn't afford. The money was available willy-nilly. Home values escalated because the demand was a crazy fake demand, as I would call it, because people who couldn't afford those homes were buying them, right? And then suddenly the market corrected, the interest rates went up, and now people were underwater. So that's what caused that recession and the subprime mess. But now the guidelines for mortgages are very strong. Post that recession, the mortgage industry had to revamp their vetting process, and now the people who are getting the loans are thoroughly qualified to get them. So the lending standards haven't loosened since that recession, right? Secondly, the home values have gone up drastically. So if you feel like you're going to be short on payments, if you feel like, you've lost your job and you can't make the payments anymore, if you put your home on the market, you're likely to get a good price for it because there's been tremendous appreciation since you got that loan, you know. There's so much equity that people have. There's some equity numbers out there that are just phenomenal. Homeowners have so much equity in their homes that foreclosure rate is going to remain below. You would have had to borrow substantially and very irresponsibility to get into foreclosure mode at this point, because your home values are that high, the rates that you have locked in were that low, so your payments are very reasonable, and you're qualified to buy the home because the mortgage process was, thoroughly vetted. So don't expect real estate to cause any recessions. Now, yes, there's all kinds of things happening in the Middle East. There's all these climate change, and we've seen almost half our country devastated by these hurricanes and the rains. So how that impacts real estate remains to be seen, especially in those states that were greatly impacted, and I'm sure that will impact the national numbers as well. But overall, the real estate market itself, the stats are very strong, and this time we are not likely to cause the recession. We won't do it. If the natural disasters and the wars and other things impact real estate, that remains to be seen, and we'll wait and watch how that plays about. So let's take a look at this graph for Chester County, and that will tell you a little bit more about what I'm talking about with actual numbers. Look at the graph on the right-hand side first. It is the dark gray line is 2022, the light gray line is 2023, and the red line is 2024. All of these are the second quarter of the year. And because that's the stats we have, we are a little time lagged here. And 784 homes came up for sale in the second quarter of 2022, right? And if you look at 2024, only 701 homes came up for sale. And so this impacts the lower inventory, and this impacts the sales as well. So the closed sales, which is to the right, that graph to the right, and it says 1928, that's the dark gray line over there. So in 2022, we had 1,900 closed sales, whereas in 2024, we have only 1,561 closed sales. So our inventory levels are really low. Once again, here is the inventory levels for the country. They're talking about 4.2 months worth of inventory. But for Chester County, that number is really, really low. We're down to 2 months of inventory. There's just not enough homes for people to buy. So what's happening with the prices here? Now you look at the left-hand side, and the median sales price. I'm going to show you another graph to show how our median sales prices have increased in Chester County. It is just crazy, phenomenal. But we are at $545,000. Back 14 years ago when I started my business, it was in the threes. It was in the low to mid 300s. And that's the number is in 14 years. Even over last year, this number is 8.7% higher than last year. The average sales price is 8.9% higher. And the home for sales is down, as we just noticed, and the closed sales are slightly above last year, but they're still pretty low relative to the 2022 numbers. And while we have Chester County, it appears, has a negative 6 months, 6% supply. It is 1.5 months of supply, and we just need more homes on the market for the prices to stabilize and for all the buyers who are looking to buy to have their homes. So to generalize about home sales, home prices, mortgage rates, etc., the shift is nothing dramatic, nothing significant. We like to read a lot into the numbers, but overall, there isn't that much change in the real estate market in an election year versus a non-election year. But let's look at the data a little closely. This is Keeping Current Matters. They are a very knowledgeable organization that comes up with all this statistics for realtors to use. And what's happening with the home sales? People are distracted, like we said. People are uncertain about the future, and in times of uncertainty, they will pull back and not make big long-term decisions for the family in these uncertain times. There's also this thing about policy expectations. So if you're a Democrat, you're thinking, okay, these are the policies and how will that impact me? If you're a Republican, you're thinking something similar. So given that this cycle is so contentious and there's just so much noise out there, there is fear, there is uncertainty, and so we do expect, the people to pull back on these big ticket decisions. However, as we've always said in the past, the real estate decisions are based on life change decisions. So if you had a baby, you just got married, you just got divorced, life continues, and things, you have to move on, and those transactions keep happening. And it's been such a crazy market for the buyers. They've been put in multiple bid situations and have lost opportunities to buy homes, and now the prices have escalated so high that if there is something on the market that absolutely suits their needs, it gets gobbled up right away still in this market. So we're talking about the Philly Suburbs market here. What's happening with the suburban market? Let's look at the Chester County numbers, right? In the national market, the inventory levels are at 4 months. We measure inventory levels with months of inventory. A 6-month inventory is considered normal. And the national markets currently are showing 4 months of inventory. That is too high. The Chester County market is at 2 months of inventory or less. It all depends on, how you take a look at your stats. So our inventory levels are really, really low right now. Though we have seen days on market creep up. So, in the Philly suburbs, this is what we're seeing in the trenches. We have homes that are sitting on the market that selling in multiple bids in the first weekend is only happening to very, very limited number of homes. If your home is a little dated, you need some work. You have some negatives like a busy road behind you or a high tension, power lines or something. You're going to sit on the market for a little bit longer than an average. And if you are this cream puff home with, all the baths and kitchens updated and the home looks like, a model home, well, that one's going to sell faster and quicker than the other homes. So people are beginning to discriminate a little bit. There was a time just last year where anything was selling like hotcakes, but now, the buyers are actually a little more demanding. The buyers are saying, if I'm paying these premium prices, and yes, our prices have gone up like crazy. We've got 15, 20, 25% appreciation in some markets. Folks, average appreciation in prices in real estate has been 2 to 3% in the last few decades. So this is extremely unusual. This is a very unusual phenomenon. And if the prices are that high, the buyers are now saying, I want this house to check off all my boxes. I'm not going to compromise. So things slow down a little bit. Now you see 20 days on market, which is not unusual in Chester County. And we see, sometimes homes getting into multiple bids after 2 weeks, after 3 weeks, maybe after the first price drop. Because that whole cycle, that mentality of, I'm going to have to bid about asking as soon as the property is on the market has slowed people down. I have buyers who are saying, I'm not going to pounce on this yet because that price is already too high. Now, if it doesn't get sold in the first couple of weeks, I'm going to go in at a reasonable price, which may be a little off depending on where the home is priced. It could be a little below market or it could be at market. And as I mentioned, sometimes we even get into multiple bids after 3 weeks on the market. So what that tells me is that the buyers are still out there. The supply is way short of the demand. The demand far exceeds supply. And still, especially in our markets here locally and, in the Philly suburbs. And if we have to compare it to the city market, Philly city is much slower than the suburbs. The suburbs are still high demand and not enough inventory for the buyers. So what's the recent changes from the lawsuit? Remember, there was a realtor lawsuit. Are they still getting paid? Who's paying the realtors? Is it the buyers? Is it the sellers? How much are they getting paid? Has it impacted the fees that the realtors charge? Well, it has impacted somewhat on the grounds here in the Philly suburbs. Let me share with you what's going on post-lawsuit. So first of all, what was the lawsuit and what two changes? The two things that changed drastically since the lawsuit is one, you can't publish buyer broker fees in the MLS anymore. There is no database, there's no one database that actually lists all the fees that the buyer brokers are getting paid. So if you're a buyer or a seller and you're like, what are the others paying the buyer brokers? That is information that we can't get anymore. That's what the whole purpose of the lawsuit was. They didn't want collusion among the realtors. Let every buyer, every seller, and every agent decide for themselves what the fees are going to be. So there is no database. one single database that will have realtor fees for everybody, for all the deals, for all the agents. So that database is gone, and that field has just disappeared from the MLS. And there's more forms. The agreement of sale has changed. The buyer broker agency forms have changed. There's a lot of new forms that have come into play. The listing contracts have changed. So the realtors are sort of grappling and kind of, going through those changes. And what does this mean for buyers and sellers? How have things changed? So as a seller, you can still offer, most sellers are still offering buyer broker fees. So, traditionally, the listing agents decided what the fee was going to be and how much of it they were going to share with the buyer's agents. In Pennsylvania, the contracts were already transparent. When you signed the listing contract, you could see how much a listing agent was charging and how much of that he was going to pay the buyer's broker, right? But there were many other states. There's only 19 states actually where that happened. In many other states, there was no transparency. So if you're wondering what changed, a lot of the realtors are still in a tizzy about why people are making such a big deal about it. But the point being, there are many states where there was no transparency, and now this transparency is welcomed, right, by consumers. So traditionally, the way it worked was the seller paid both the buyer broker and the seller broker, and that was determined when the listing contract was signed. And it didn't matter who the buyer broker was. We didn't even know who that was going to be, but that number was already determined. It was predetermined. So what changed? You can still do business the same way. I mean, the sellers can still predetermine what they would like to pay the buyer's agent, and it is just more transparent now what your listing agent is making and what your buyer's agent is making. And that's how you write up the form, right? The slight change here that happened was that there are some sellers, who are now beginning to say, well, I want to negotiate this based on the offer I get, based on, the strength of the buyer, based on, all the other terms of the offer. So they would like to negotiate the buyer broker commission along with the other terms of the offer that buyer broker is bringing them, right? So they didn't want to decide ahead of time. They didn't want to decide in advance. Now the realtor community is completely torn between these two options. And there are some who believe that it has to be done the way it was done before. There are some who believe the new way is a better way. Right now, everybody is experimenting and we don't have the new norm yet. So it all depends on what the sellers want, what their agents have discussed with them. And you can either go on the market and declare ahead of time what you're offering the buyer's agent, or you may tell the buyer's agent, just send it to me with the offer. I will evaluate everything at the same time. So I'll tell you pros and cons about this later. So that was the big change. And if you're a buyer, the biggest change is that now that you have to sign a buyer agency contract with your realtor before you even see the house, before you even schedule a showing to see it. So remember, even if it is your trusted real estate advisor whom you've known for a long time, who has been referred to you by your friends or family, you have to sign something. And even if you click on one of those online portals and they send you some, somebody who has been advertising for that zip code, you still have to sign something with them before you even see the house. So step back here for a minute, and for the buyers, I'm going to give 3 tips on what to think about before you sign those contracts, right? The first thing you want to think about is, is this realtor someone you're trusting and like and trust, because that's who you're going to use as your agent in case you end up buying the house. So first thing you want to see is, what is the term of this contract, right? Is the realtor going to be a realtor for the next, year, or for however long it takes you to buy the house? Or is the realtor going to be a realtor just for 15 days or a month? Or is this realtor going to be a realtor just for this property only? And everything is negotiable. Like I for one, most of my buyers are the ones that are referred to me by my past clients or people who know me, and they trust me, and they're like, Bela, you're going to help us find the house. So they don't have concerns about, signing a real estate contract, a buyer agency with me, because I'm going to be with them in the entire purchase, throughout to the end, right? But there are some who, if you're clicking on one of those online portals and you don't know who's going to show up at the door, maybe you want it to be just for a few days, or maybe for that property only. So watch out what you're signing, right? The other piece of that buyer agency is the compensation. How much are the realtor fees going to be? How much are you going to be paying your buyer broker? And right now, the sellers are still, for the most part, paying the buyer broker fees, right? So the contract states that if the seller doesn't pay, the buyer remains responsible to pay. So the question is, are the sellers still paying? Yes, they are paying. Is it negotiable for really hot properties? Yes, it is. But it is still the norm. The sellers are still offering a buyer broker commission. So if you have signed with a buyer agency with your own buyer, chances are that you have to pay just a small amount or nothing at all to your buyer broker. So those are the main changes that have happened in the industry, and otherwise it's business as usual. As usual, the seasoned agents, the knowledgeable agents are the ones that are able to explain all the changes to their clients with clarity. But there are some who are still confused, and they're still kind of walking through it. Their brokers are helping them walk through it, and it'll impact the businesses of some realtors for sure, because that sure bet of yes, we're going to get paid this percentage because the seller is paying is now a little tenuous. So time will tell. The new norm hasn't set in yet. So far, it's business as usual, but we're observing the changes as we go along, as we are doing the deals in the trenches. So folks, wrapping up my market update for September 2024, we talked about how elections are going to impact, real estate. We talked about the recent changes with the lawsuit, and we talked about the local Chester County market and the Philly Suburbs market, and see how we are different from the national numbers. And it is still a low inventory, galloping prices kind of market. We see some sales stagnate because the buyers are now cautious and actually a little more demanding. We are beginning to see inspections roll in and higher days on market, and the giving those crazy prices for any home is not the norm anymore. There are some homes that do still get those, but there are others where the buyers are a little more cautious and saying, well, I'm not going to go crazy. I'm going to wait because at this price, I want the home to check off all my boxes. So we welcome the plateauing market because the realtors are just, bombarded with this stuff in the last 3 years, and it's been a crazy acceleration in prices and very few sales. And, we're trying to make sense out of all of this. So stay tuned. Every month I come up with the market, update for the area. And there are times when we can go back and see if I was wrong. There are times when we can, say, well, Bela was right. But, I welcome your comments. Please comment below. Do you agree with everything I said? What are your questions? Do you have any questions that you would like answered? And I'm happy to answer them. Please comment below.